Big news today. China has just ordered its companies to stop using cybersecurity software from several major American and Israeli firms. This isn't just a minor policy tweak. It's a sweeping top-down directive that's making waves across the global tech industry. The announcement came suddenly, catching many off guard, and leaving both Chinese businesses and international tech giants scrambling to respond. This isn't a suggestion, it's a sweeping mandate that's sending shockwaves through the tech and finance worlds. Investors are watching closely as shares of affected companies dip, and analysts are already predicting ripple effects that could impact global supply chains and the future of cross-border tech partnerships. Imagine a company in Shanghai suddenly having to replace its entire security system overnight. IT teams are working around the clock, racing to uninstall foreign software and find reliable domestic alternatives. For many, this means rewriting protocols, retraining staff, and facing the risk of temporary vulnerabilities, all under intense government scrutiny. The directive targets the very tools companies use to defend against hackers and digital threats. These aren't just any programs, they're the backbone of digital defense for banks, telecoms, and even government agencies. Now, all of these organizations must pivot to homegrown solutions, which may not yet match the sophistication of their foreign counterparts. For years, Chinese firms relied on these international products, but now the government says foreign tech is too risky for critical security. The concern is that foreign-made software could be a backdoor for espionage or sabotage, especially as global tensions rise. This move is about more than just technology. It's about national security and digital sovereignty. This is about Beijing taking control of its digital infrastructure and reducing dependence on Western technology. By mandating the use of domestic cybersecurity tools, China is signaling its determination to build a self-reliant tech ecosystem, one that it can monitor, regulate, and protect from perceived foreign threats. The timing is no accident. Tensions with the US over tech and data security are already high. Recent years have seen a series of tit-for-tat restrictions, with both sides accusing each other of cyber espionage and unfair trade practices. This latest move is likely to escalate the standoff, making cooperation even more difficult. Think of it as a new front in the global tech rivalry, where software and data are the chess pieces. Each country is maneuvering to protect its own interests, and the stakes are higher than ever. The outcome could redefine how technology is developed, shared, and secured worldwide. This move forces companies to choose sides and fundamentally reshapes the cybersecurity landscape in one of the world's largest economies. Multinational firms must now decide whether to comply, risk losing access to the Chinese market, or invest in local partnerships to stay relevant. The ripple effects will be felt far beyond China's borders. It's a bold step that signals China's intent to build its own digital wall, one that's as much about control and security as it is about technological independence. The world will be watching closely to see how this new era of digital sovereignty unfolds. Let's look at the companies hit hardest by this directive. Major US names like Palo Alto Networks, Fortinet, and Broadcom's VMware are now banned in China. Israeli giant Checkpoint Software Technologies is also on the list. These aren't small players. They're global leaders, now suddenly locked out of a massive market. For these firms, it's a direct financial and reputational blow, with existing contracts at risk and future growth in China uncertain. Chinese companies that relied on these products are scrambling for domestic alternatives. Beijing is clearly making room for its own cybersecurity firms to take over. For Western companies, it's a stark reminder of the political risks of doing business in China. Why is China doing this? What's really driving these sweeping changes in the country's approach to technology and cybersecurity? It all comes down to national security. For China, the digital world is now a front line in the battle to protect its sovereignty and future. Chinese regulators fear that foreign cybersecurity software could be used as a Trojan horse, collecting sensitive data and sending it abroad. The concern is that hidden backdoors or vulnerabilities could be exploited by foreign governments or companies, putting China's most valuable information at risk. These programs have deep access to company systems, making them a potential risk for digital espionage. Even routine software updates could become opportunities for unauthorized surveillance or sabotage. Whether or not these fears are justified, they're driving policy. Chinese lawmakers are taking no chances, enacting strict rules to limit foreign influence in critical sectors. China's move mirrors US bans on Chinese tech like Huawei, citing similar security concerns. Both sides argue they're simply protecting their own interests in an increasingly digital world. It's digital reciprocity. If you don't trust our tech, we won't trust yours. This tit-for-tat approach is reshaping the global technology landscape as countries race to secure their digital borders. This is about data sovereignty, ensuring Chinese data stays under Chinese control. The government wants to prevent sensitive information from leaking overseas, whether intentionally or by accident. The new directive is the next step in a broader strategy to localize and secure China's digital infrastructure. By building up domestic capabilities, China hopes to reduce reliance on foreign technology and strengthen its own tech sector. For Beijing, foreign access to critical data is a clear and present danger. The stakes are high, with economic competitiveness and national security hanging in the balance. As technology becomes more deeply woven into every aspect of society, the risks and the need for control only grow. The message is simple: China wants to control its digital destiny, shaping the rules of the game for the future of global technology. This crackdown is part of China's long-term push for tech self-reliance. The goal: replace Western technology with homegrown alternatives across the board. After seeing US sanctions cripple Huawei, China doubled down on building its own tech ecosystem. Billions are being invested in domestic R&D, and local champions like Qihu 360 and Sang4 are poised to fill the cybersecurity gap. The government is creating a protected market for Chinese firms to thrive. This is de-Americanization in action, replacing US hardware and software wherever possible. The directive is one of the boldest steps yet, signaling that China is willing to accept short-term disruption for long-term independence. The message: if a Chinese alternative exists, use it. China is betting big on its own tech future. The stock market wasted no time reacting to China's directive. Shares of Palo Alto Networks, Fortinet, and Checkpoint all dropped sharply as investors priced in the loss of the Chinese market. Even a 2 to 3% dip means billions in lost value for these tech giants. The sell-off reflects fears that this is just the beginning. Other categories of foreign tech could be next. Investors are now rethinking the growth prospects of Western firms in China. The market's message: this is a fundamental shift, not a passing headline. Companies with heavy China exposure are suddenly seen as riskier bets. Meanwhile, Chinese cybersecurity stocks are on the rise, poised to benefit from the new policy. The financial fallout is a clear sign of the deepening US-China tech divide. This move is just the latest chapter in the escalating US-China tech rivalry, a contest that is shaping the future of innovation, security, and global influence. What began as a competition over trade and manufacturing has now evolved into a high-stakes battle for technological supremacy, with both countries determined to outpace the other in critical sectors. Both nations see technological leadership as key to economic and geopolitical power. The stakes are enormous. Whoever leads in technology will likely set the standards, control the supply chains, and influence the rules that govern the digital world for decades to come. The US has long dominated the global tech landscape, but China is catching up fast, investing billions in artificial intelligence, 5G networks, quantum computing, and cybersecurity. Chinese cities are rapidly transforming into smart hubs, powered by homegrown innovation and state-backed funding. In response, the US has imposed tariffs, export controls, and blacklisted Chinese firms like Huawei, citing national security concerns. These measures are designed to slow China's progress and protect American interests, but they have also fueled tensions and uncertainty in global markets. China's ban on Western cybersecurity software is both retaliation and self-defense, aiming to reduce reliance on foreign technology and safeguard its own digital infrastructure from perceived threats. The result is a tit-for-tat cycle, with each side responding to the other's moves, and a growing decoupling of the two countries' tech ecosystems. This separation is forcing companies and governments worldwide to rethink their strategies and alliances. Global companies are now being forced to pick sides, navigating a fractured landscape where access to markets, talent, and technology is increasingly determined by political loyalties rather than business interests. The competition is redrawing the map of the global economy, creating new alliances and fault lines. Countries and corporations alike are reassessing their partnerships, supply chains, and long-term strategies in response to this shifting balance of power. This directive is a clear reminder that technology and geopolitics are now inseparable. Every policy decision, every innovation, and every trade deal is now viewed through the lens of this rivalry. The world is watching as the tech Cold War heats up, with the outcome set to define not just the next decade, but the very nature of global power in the 21st century. At the heart of this conflict is data, the new oil of the digital age. China generates and controls vast amounts of data, seeing it as a strategic asset. Strict laws like the PIPL ensure Chinese data stays within its borders. The fear foreign software could leak valuable data to other governments. China's solution is to ban foreign security tools and rely on trusted domestic firms. This isn't just a US-China issue. Europe and others are also tightening data controls. The era of free-flowing global data is ending, replaced by data nationalism. China's move is a powerful declaration in this new age of digital sovereignty. For global businesses and investors, the lesson is clear. The world is becoming more fragmented and politicized. Companies can no longer assume open access to every market. Political risk is now front and center. Firms operating in China must prepare for stricter rules and possible tech decoupling. Investors are rethinking bets on Western tech firms' China growth stories. At the same time, Chinese tech companies may see new opportunities as protectionism grows. The global economy is being reshaped by nationalism and great power competition. Success now requires not just innovation, but geopolitical savvy and adaptability. A single government directive can erase billions in value overnight. Navigating this new world demands a whole new playbook. The future points to a fragmented digital world, a splinter net of separate tech spheres. We may soon see a Chinese internet, an American internet, and a European internet, each with its own rules and companies. For users, this means apps and services may not work everywhere. For businesses, it means navigating a maze of regulations. The simplicity of the global tech ecosystem is giving way to digital walls. The big question: will this decoupling continue, or can the US and China find common ground? Businesses and governments must prepare for deeper divisions, even as they hope for de-escalation. China's cybersecurity ban is a symbol of the larger shift from globalization to digital sovereignty. The choices made today will shape the digital world for generations, and we'll be here to cover every step.